Well, folks, here today we're going to speak about something we don't talk about too often on the channel, and that is selling stocks. Obviously, the market has gone up tremendously. A lot of stocks are up massively, and I kind of got this idea because while I was working, a lot of times I'll have CNBC on in the background. And they had this lady on, and she was talking about basically she took a bunch of profits, a few months ago, and now all those stocks are much higher than where she sold at, right? And so I think there's a lot of folks out there looking at this market and wondering, is it time to start taking some profits here? Kind of what's my view on that? And also I'll share with you in this video a stock that I am considering actually selling shares of, and where I would put that money as well. And we're also going to talk about some opportunities I see in this market, because there's definitely, I think because certain stocks have gone up so much, it leads some folks to think like there's no opportunities in this market, right? I'm going to draw some attention toward a few opportunities, okay? So yeah, busy video, action-packed. I appreciate everybody joining me as always. Thanks so much for being subscribed, folks. I hope it was another tremendous day for you all, as always out there, okay? Now, also, thank you everybody that also follows me on Threads. On Threads, we just hit 7,000 followers on there, so I appreciate each and every one of you that follow me on Threads. I'm actually posting a lot on there, so if you use Threads at all, you definitely make sure to give me a follow, because I post at least probably once, if not a couple times a day, essentially, on Threads. I'm posting quite a bit, so yeah. And also, pin comment down there, free stock picking checklist I just put together for you guys about 48 hours ago or so, okay? Alrighty. So here's a dilemma we have, okay, and a dilemma indeed. We look at a stock like Meta, right? Meta's doing us tremendous. Now, there's a couple scenarios that have been taking place in a stock like Meta, and this could go for a lot of these kind of big cap tech stocks that people look at, and they really want to own these sorts of stocks. Let's call it what it is, okay? People have looked at the stock. It bottoms out at $88 a share back at Q4 of 2022, right? Then it goes up to $100, and people say, I'll wait for it to go back down to that $80 level. Then it goes up to $150. People are like, I'll wait for it to go back down to $100. Then it goes to $200. People are like, I'll wait for it to go back to $150, and then $250, and I'll wait until it goes back to $200, then $300, right? Now it's got to go back down to $250, right? And now the stock today, I believe, closed at, I think it was $313 a share, or something like that. Okay, I believe it's over $310 a share now at this point in time, right? And the stock just continues to roll and roll and roll. And you have folks saying, I'll wait till it comes down, and it just doesn't come down, and it just keeps going up and up and up. And so it's like, well, okay, now do you want to buy it at $313? Do you want to buy it at $413? It's really up to you, right? And obviously, you've had some folks that say, I'll take profits, right? I'll take profits as kind of time comes down. Now, if you're taking profits as a stock was going up, so let's say, it went to 150, you're like, I'm going to take some profits here. It went to 200, you're like, I'm going to take some profits here. Usually you're taking those profits because either you got a better place to put it, or you're afraid that stock's going to go down, right? Otherwise, there's not a logical explanation to selling the stock. You either got to feel like there's a better place to put your money, or you got to feel like that stock price could go down, right? And obviously, it's done anything but go down. Some of that gets into trying to time the market. And when it comes to long-term investing, something I want you guys to always remember is, with great companies, it's usually not worth it to even try to time these things out. Usually, in most scenarios, you just hold through unless the valuation is so ridiculous that it's like, I got to get out of this. Then in that situation, I can understand it. But in Meta, that's never been the situation this entire year. You can never, and still to this day, even with Meta at 313, there's no way you can make a logical argument that Meta is overvalued. No way. It's not even literally possible. You might not want to own it for this reason or that reason, but you cannot even come close to arguing Meta is overvalued. So if you can't argue that at 313, you surely couldn't argue that at 150 or 200, right? Now, as time ticks on, right, more and more FOMO starts to build over time, right? At first, it's okay. People don't feel that much FOMO. They're like, oh, whatever, these stocks are going up. They're going to come back down, right? And they just keep going up month after month after month after month. And as time ticks on and the story becomes a little less bad with the markets overall, and it becomes a little better and better and better, right? More and more FOMO starts to build in. More and more bears start to give up on their bearish theses, and they start to say, you know what, I think I got to actually go long. I think I got to start buying these stocks. And we've seen that. If you look at data like the AAII investor sentiment, right, we've seen people start to flip from bearish over to neutral, and the neutral people starting to flip to bullish, right? And now there's more people bullish than neutral or bearish on the market, which is a big flip from basically everything we went through almost this entire year, and up until about a month and a half ago, and basically all of 2022, everybody was just overwhelmingly bearish, right? So that's something we see playing out. And as time ticks on, you get more and more FOMO start to build, because there's a lot of people holding cash. There's a lot of people in short positions that are getting slaughtered, right? And a lot of these people that have been kind of wary, I don't know about this market, I don't know about where things are headed, I don't know about inflation, all this stuff. They start to look and they're like, I've just missed a 200% gain in Meta while I'm over here in cash, right? I just missed a 200% gain in Nvidia because I'm over here in cash. I just missed a 50% gain in this, super safe stock over here, and because I'm over here in cash. What am I doing in cash? And so as time ticks on, more and more FOMO starts to build. People start to think, what the hell am I doing all in cash? I need to be in this market, okay? And that's the stage we're in right now, where that FOMO is starting to build. People are starting to look and say, I think I need to start going long. And you're seeing it when more and more, and we'll get into the Big Short man. He was on CNBC just a little while ago. I'll tell you what he said. And you're starting to see with more and more of these bears are starting to go to that bullish side, right? Do you guys remember what they were saying about Tesla stock 6, 7, 8 months ago? They were saying their stock's going to $50 to $60 a share. Do you remember that? Does anybody remember that? Does anybody remember that? Let me know in the comment section if you remember that. Everybody's talking about it's going to $50 to $60 a share, right? It never happened. Not only did it not happen, it never even got remotely close to that, okay? It bottomed out a little over $100 and then just started going up and up and up from there, right? And I know some of you guys got to take advantage of that insane opportunity we got really in the third quarter and fourth quarter when it came to Tesla stock. And it's an extraordinary situation, right? Because you look at a stock like that, the stock price was down 70% roughly. 70%, and it wasn't enough. And this is one of the greatest companies, one of the greatest stocks in the entire stock market. And it was down 70%. And for a lot of folks, that wasn't enough, right? It was never enough with Tesla. Even if it went to that $60, $50 range that people were so convinced it was going to, it still wouldn't have been enough. People would have been saying, I'll wait to go to 30 to 40. When you got the greatest companies in the world giving you 50, 60, 70, 80% discounts, and I preached this to the end in 2022, and hopefully it got through to some people. Some others, I don't know if they ever got that memo. You got to take advantage of those. How often do you get those opportunities? I can tell you how often. Usually every 5 to 10 years. Sometimes you have to wait longer than 10 years to get an opportunity where the greatest companies in the world see their stock prices decline 50, 60, 70, 80%. It is extremely rare. And when you get it, you better pounce, because otherwise you'll look back in a few years and be like, oh man, remember when I had a chance to buy Meta under 100? Remember when I had a chance to buy Tesla at $100? And you start to look at these things, and as time builds on, more and more people realize I was wrong, and I can either jump on now or I can continue to wait, right? And maybe the stock's back at an all-time high later this year or next year, right? Which all-time high for Tesla is over $400 a share. It's $277 today. That's where people get into some problems here, right? You look at a stock like Palantir, and Palantir has been fascinating to me, because Palantir should be the ultimate kind of Wall Street stock. Palantir is a company you really need to go down the rabbit hole. You really need to do extensive research into their products, why their products matter, and all these sorts of things. And who's got the sort of funds, the sort of money to research something like that? Well, it should usually be Wall Street, right? But Wall Street decided to not spend the time researching Palantir. They made that conscious decision to not spend the time really researching Palantir, right? And as the stock just sold off more and more in 2022 and went all the way down to $6 a share, it was only the retail folks, the smaller investors, the people that have a portfolio of $50,000, $100,000, $25,000, $250,000. It was those folks who actually spent the time understanding what Palantir had going on. The financials, how the financials would flip, the products, why they were such game changers. And now all of a sudden, the story's starting to come together, and now all of a sudden Wall Street's keyword is starting to hop on this bandwagon, when they refused to do any of the research work necessary to be able to see where things were going in the future, right? And you look at a stock like that, right? And now, obviously it's going where it's going, right? And we'll see where the numbers shake out over the next few quarters with Palantir. But the thing you got to understand about Palantir's stock price is, if Palantir comes in and they have good guidance, strong guidance, they beat numbers very nicely. Do you know where the stock price is going? It's going to $22 after earnings. If they come in and really have very strong guidance and they beat numbers, let's call it by a pretty substantial margin, which I think is a potential. Now, if they come in bad numbers, it's not going to 22, okay? But I can tell you, if they come in with strong numbers and strong guidance, 22 plus, we're going to be there. And that'll happen quick. And that was a stock that was $6 last year, okay? And so these are important things to kind of factor in here that Wall Street never even considered this, and now all of a sudden they're considering. That's why the stock's moved. It hasn't moved because of retail. Retail was buying last year. Not to say no one from retail is buying this year, but they're not pushing that market cap anymore. There's a market cap that's tens of billions of dollars now at this point in time. The money that's coming into Palantir is big money now at this point in time. Oh, by the way, S&P 500 inclusion still coming down the road. We haven't even got to that stage yet. Oh my gosh, can you imagine when that comes? Woo, baby, are things going to get fun there, right? Now, I want to tell you guys something, okay? This is a brutal market to not be long, right? If you are cash heavy, this is absolutely your worst nightmare. It gets no worse than this. This is your worst nightmare if you went into this year super cash heavy, you refuse to be a buyer, you're not long at all, because you're looking at the Qs up 43%, you're looking up at the NASDAQ up 36%, you're looking at SP 500 up 18%, inflation's coming down in a massive way. It looks like the Fed's very close to being done. They should already be done, in my opinion, but they might try to, raise one or two more times. But nonetheless, folks, this is the worst. This is your nightmare if you are not long this market, because it's running away from you. And to take that a step deeper, it's not just the indexes that are running away from you, it's individual stocks, the stocks that everybody wants to own. Let's be honest, what are the stocks that everybody wants to own on Wall Street? Nvidia, Tesla, Meta, AMD, these sorts of stocks, right? 81% this year. 150% this year, 150% this year, 220% this year, right? That is your nightmare scenario if you're cash heavy. And now you begin to understand why these stocks are starting to push up more and more, because more and more of these Wall Street folks are realizing, crap, I am severely getting destroyed by the indexes. I need to play catch up. And so they start funneling money into these stocks to try to catch up in this back half of this year, because they realize how far they're underperforming the market. And that's where you get that last kind of I don't want to call it a blow off top kind of move there, but that last kind of epic move is all that cash money, all that money that, has been unsure, starting to get a little more confident and starting to get FOMO simultaneously that says, it's either I buy Nvidia at $425 or I pay $625 for it at this time next year. That's what happens. It's those folks saying, I can either buy Meta for $313 today, or I can buy it for $513 next year. What do I want to do? That's what starts to happen. And that's where you get that last kind of blow off the top scenario. And then after that, you have a moment in the market where the market either starts to come down again, or the market has a breather moment where it doesn't do anything for many months or even a few quarters. That's what ends up happening over time, right? So this is a market folks are having to deal with, and it's an absolutely brutal market. It's also brutal, I got to be honest, okay? It's even brutal for somebody like myself when I'm looking at what do I want to hedge in against for next year, right? Because I'm already thinking about next year, right? And I need to do some hedges over the next few months to get ready to, just in case the market tanks at all in 2024, the economy tanks, whatever happens. I need to, do some hedging, right? Because I'm so long the market all the time. So I'm looking at different hedge opportunities, but I'm having trouble figuring out where I want to go with my hedge opportunities going into this year. And I need to figure this out in the next 2 to 3 months. It's not like I have all the time in the world. I need to figure this out quickly, because I'm going to likely want to do either something for Jan 2025s or Jan 2026s for some of my hedges, right? But probably Jan 2025s for puts, right? And so I'm looking out there and I'm looking at something like KB Homes. And I'm like, okay, KB Homes has been flying. The stock's up 74%. Interest rates are still extremely high, but on the flip side, inventory is so low for existing home inventory, right? And a lot of people continue to want to buy new homes because sometimes you get some kind of teaser rates and various things like that. And I'm also looking and I'm like, the PE ratio is 5.88 on the stock. So let's say they made half the profitability that, next year that they did this past year. We're at 11, 12 PE. That's still not high at all. So I'm looking at something like KB Home, and I'm like, dang, man, is that really where I want to go? Looking at something like Toll Brothers, I'm like, this stock's up 70% in the past year. It's insane. It's up even more just this year alone, right? And I'm looking at that, but it's at a PE of 6.3. So if they were half as profitable over the next year as they were the past year, the P is what, 12? It's not like that's super high. So that's where I'm having trouble with some of these, hedges, is trying to figure out where do I want to hedge for next year, right? And so it's even a brutal market for somebody like myself because it's not like you really have slam dunk opportunities out there. It's not. And so that's where you're like, dang, it's a pretty brutal market. Now, while I was working, Mr. Big Short himself, Steve Eisman, came on, right? The man got very famous from obviously a very famous movie being made about him, right? The Big Short. And it's interesting, right? Because basically this man starts out the conversation by saying he underestimated how underinvested, fund managers were. Big money, basically, is the best way to put it, okay? He underestimated how underinvested big money was. And, the market's going obviously very bullish. And I'll be honest, the man didn't sound bearish, which is scary. I mean, this guy, he's usually always sounds bearish. He didn't even sound bearish. You watch that clip and it's like, for the guy that's, known for the Big Short, he didn't sound bearish at all. He actually even talked about being long. If I recall, he even talked about being long some tech stocks. Holy smokes, that's no dang jokas, right? And so I'm just watching that clip and I'm just like, wow, this is an interesting moment for the market that we're in, right? And, I was even watching Mav's video last night. Mav was even talking about, you got to be long some of the value plays and whatnot. And so I'm like, we're at a very interesting moment in the market now at this point in time. Very, very interesting, right? Now, let's speak about something, right? Selling some of these stocks to take some profits. The first question you got to ask yourself is, where does the money go? Where does the money go? Because if you're going to, let's say you're like, I want to take some profits in Tesla, right? Okay, where are you going to put that money? Is that money going to be in a better place for the next 3 years than Tesla stock, right? Because you really need to be thinking, you don't think about the next 3 weeks or 3 months. Why don't you think about the next 3 weeks or 3 months with Tesla or Meta or any of these other stocks, Nvidia, Amazon, whatever? The reason is because you don't know how to time the market. I don't know how to time the market. I've been doing this for 15 years. Every day of my life revolves pretty much around the stock market, right? I don't know how to time the market. Big Short man doesn't know how to time the market. No one knows how to time the market, okay? And so to say maybe over the next 3 weeks or 3 months or 3 days, I could sell Tesla, buy it back cheaper, that's a fool's game. You can do that. It's a gambling decision. Just understand you're making a gambling decision. You're not making an investment decision. You're making a straight up gambling decision, okay? No different than, obviously, I live in Vegas, going down to the casino and playing craps or whatever. That's a gambling decision, okay? So if you're going to sell something, let's say you think the valuation is way too high, maybe you just don't like it anymore, you're like, I don't think I really like this investment. You got to ask yourself, where the heck's the money going to go? Because too many times people sell out of things and they don't know where the money's going to go. For instance, I'm thinking about selling a stock, and we'll speak about that later in the video, but I have a specific place that I'm ready to put the money. Before I've already contemplated this, if I'm going to sell it, where's the money actually going? You need to have that place lined up. If you don't have that place lined up, then what the heck are you even thinking about selling for, okay? If you're holding cash, or if you're going to say, I just want to build cash balance a little bigger here, that's fine. But just make sure you're likely keeping it in a savings account, right? There's a lot of reputable savings accounts, FDIC insured up to $250,000, right, that are paying 4 to 5% right now, okay? Plenty of those options out there right now that are paying 4 to 5%. So if you're going to say, I'm going to sell to hold some cash because I don't have enough cash around, okay, just make sure you're at least getting something on that cash, because the way the market's rolling, the last thing you want to be is collecting nothing while the NASDAQ goes up another 5 or 10% or something like that, right? That's not a fun position to be in, right? I see opportunities in this market still at this point in time, okay? A lot of opportunities. And let me run you guys through some of those opportunities I see in this market right now, because there's several of them in different industries, different sectors, doing different things in their businesses. PayPal is a great example of a stock that just started its 2-year bull run, in my opinion. Just started. We're at the infant stage of kind of PayPal going on an epic run here now at this point in time. And so this is a stock that I look at, and the P is disgustingly undervalued. I think the growth is going to be much stronger than folks anticipate. Once a new CFO and CEO are announced, which I think they'll be able to bring in top-tier caliber talent, I think we're off to the races, and I think this stock will hit 100 pretty quickly, and then it's on its way to 150 after that. So we'll see what happens. I'm obviously placing my chips on the table, and we might come back to PayPal a little later on in this video. Another opportunity I see out there in the market is Wynn Resorts. Wynn Resorts is a stock that's trading a little over $100 a share. Now, when times are good at Wynn, the stock trades 200 plus. So a lot of people think Wynn's done, like it's had its big move. No, you don't know Wynn stock very good. You don't know the history of Wynn stock. As somebody that's been a shareholder on and off of Wynn for, gosh, probably close to a decade now at this point in time, I can tell you Wynn goes through some epic ups and some epic downs. And it looks like it's on its way to doing another epic up move. And the reason is Macau's just started to come back. I mean, you see these Macau numbers, you know, they're up hundreds of percent on a year-over-year basis. It looks like things are starting to come back in the right place. And so you got to understand what the stock like Wynn, if the economy stays decent, we don't need a booming economy. If the economy stays decent, Wynn's going to likely make a pretty epic run over this next 12 to 24 months. Vegas continues to be strong, right? And then if we talk on top of that, the strength in Macau and those properties all getting back to major profitability over this next few quarters, game changer for Wynn. Never mind once the excitement starts to build around, you know, how big that opportunity could be in the property they're building in the Middle East right now. So that's a stock I look at, and you know, in the gaming industry that I think is a pretty good opportunity out there, right? I see an opportunity in something like Cheesecake Factory, very undervalued stock here, right? I think it just started a nice move up to 60. We'll see what happens, obviously, over the next year or two. But this is one I think is one of the most underestimated stocks out there. I think it's the most underestimated kind of, let's call it, if we were to put it into the food category, the restaurant category, I think it's the most underestimated stock, the most disrespected stock in the space, and I think that's going to change in a pretty epic way over the next year or two. We'll see what happens, but that's an area I see opportunities, right? You know, if you want to play dangerous, we can play dangerous. Some of the MJ plays, like the Planet, Avant, companies that have big, huge cash stack balance sheets, they're trading at the lowest valuations pretty much they've ever traded at in their histories, are pretty dang close to it, right? You know, those stocks are, if you want to play a little dangerous, you can play a little dangerous, and those or those type of stocks that have that, like, insane kind of risk-reward profiles behind them, right? Now, in the MJ space, be careful if you're trying to find any stocks that, or let's just call it, have bad balance sheets. If you look at Avant's balance sheet and you look at Planet's balance sheet, those are probably the two best you'll find in the entire MJ industry. If they're not the best, they're certainly very, very close to it, okay? And so just do keep that in mind, because that industry looks like it's kind of bottoming out and things should start to get better in the back half of this year, but you can't always plan on everything getting better. What if it gets worse? That's where balance sheet comes in a pretty substantial way, and it looks like Avant and Planet are pretty set as far as that goes, right? Somebody in the private stock group even said, hey, take a look at Upwork, take a look at Fiverr. And I took a look at those stocks, and I got to say, those might even be opportunities. I got to do more digging with Fiverr and Upwork and see if they are. But, those stocks prices have come down immensely, and I got to say, those might even be representing some opportunity in this market. So, just what we've gone through here, right? We're talking about freelance work. We're talking about MJ plays. We're talking about restaurants. We're talking about high-end resort. We're talking about, let's call it transactions. So when you look at all this across the board, like there's a lot of different opportunities in this market, right? Even a big dog stock like an Amazon, and I know the stock's gone up a lot this year, this is still a tremendous opportunity. This is still a stock I'm buying, and I'm planning to buy all the way to 150. It's still an opportunity when it comes to Amazing's on. And so I think a lot of people are underestimating the numbers that are going to come out of AWS over the next few years. And when Amazon starts to show reaccelerating growth in AWS, it's the next leg up for that stock. If they show a nice reacceleration of AWS growth or guidance that implies that they're going to see a nice uptick in accelerating AWS growth next quarter, the stock's up 10-15% the next day, if that happens. If they still AWS is not good, we're not planning to be good anytime soon, then, the stock's going to not do much, okay? Now, Corsair Game, okay? I am considering selling some more shares of Corsair Gaming. I have already sold some shares of Corsair Gaming, but I'm considering selling some more. Not because I don't like Corsair or I don't believe the stock can do well. It's just, I look at this, and it's about a $90,000 position in the public count, right? Public count is right now at, somewhere between 1.8 and 1.9 million dollars, right? So it's not like it's a crazy big position, but it is $90,000. Now, there's a stock I look out there, and in the public count, I'm like, I have less money in this other stock that I actually like more for the next 2 or 3 years than Corsair Gaming. And so this is what's leading me to a thought process of maybe selling some more shares and maybe taking this down to 3,000 shares, because I still want to be a shareholder of Corsair Gaming. I'm just looking and I'm like, I think there's a better opportunity. And that better opportunity, in my opinion, is PayPal. And so I'm looking at PayPal, and in the public account, I got about $52,000 in PayPal stock, $90,000 in Corsair. I mean, if you're just going to tell me what stock do I believe is going to go up more and less downside risk over the next 24 to 36 months, it's freaking PayPal, man. It's PayPal. And so that's where I look at the public account, and I'm like, I think I'm going to need to sell some Corsair and put some of that money in PayPal. So we'll see what happens, but that's something I am strongly considering doing. And those are tough decisions. Selling decisions are always very, very tough decisions to make, folks, okay? Check out the pinned comment down there. Get access to my investing checklist that goes through all 15 parts of different things I look for in stocks. The more yeses is the better. It's absolutely free. I put it together for you guys about 2 days ago or so. And yeah, once again, that's pinned comment. If you're looking to apply to join my private group to see if you're a good fit in there, learn everything I got up here, how I run my portfolios, everything like that, then check out the description area. There's an application down there you can fill out, and we'll see if you're a good fit. Much love as always, and have a great day.